my clock, so we'll go ahead and get started. Everybody is on mute right now, so if you can maybe type into the question box whether you can hear me and you can see my screen, that would be great. Okay. Thank you. Okay, we're going to get started here. So we are rolling out a refinance product. We are partnering with Lakeview Loan Servicing to roll it out. So those of you, if you are interested in this program, you will need to, if you're not already a customer with and signed up with Lakeview, you'll need to do that. Okay, here and see. Okay, you'll need to do that. And I've got Deb Monahan from Lakeview on here with me. And I'm just going to do a real quick intro of why we're doing what we're doing, and then I'm going to hand it over to Deb, and she's going to give you all the ins and outs of what we're doing. Okay, so just to real quickly, who eligible for this program, just so you know, those who are eligible for this program are going to be any borrower who has a 7-year down payment assistance second mortgage that we would not otherwise subordinate if they refinance the first mortgage. Those are the only borrowers we're going after. Loans in grants for grads or those that don't have any down payment assistance are not going to be eligible because you'd be able to refinance those on your own otherwise. If they had grants for grads loan, we would subordinate the second. So we're not trying to compete with you. We're just trying to give an option to borrowers who can't refinance otherwise. So why are we doing this now? Well, we've been working on this project for about 2 years. And as all of you know, rates were great there for a little bit. And now not so great, but hopefully we are setting our borrowers up who we are now taking loans for in the future when the rates go back down. And we're sure that they will, that we'll be able to refinance them. We wanted borrowers to have an opportunity to get a lower rate that would not have been able to otherwise, and also at the same time maintain our revenue stream so that we can continue to offer DPA. So we brought on a new servicer, Lakeview Loan Servicing, as I said, which has taken some time to get up and running. I'm sure anyone who's been through all that knows that it doesn't happen overnight. So I'm going to now turn the presentation over to Deb. If you have questions, I'll be monitoring questions and we can take them at the end. So Deb, if you'd like to take over, I will stop sharing my screen.
All righty. Thanks, Erin. Let me see if I can
do what I ask it to do and stop sharing my screen.
Yeah, it's still not allowing me to share.
Okay. Let me see if I can figure this out.
I think you have to make me the presenter. All right, I just did it myself.
Okay, thank you.
Okay. All right. So, Erin, can you see my screen now?
I can, yes.
All right. Well, thanks, everyone. Especially thank you for being patient with us as we manage. You can see both Erin and I are very technically savvy with this. But again, thanks a lot for your patience. So first of all, before I get into this, you all know who Ohio Housing Finance Agency is. We're going to call them OHFA. Again, that's a mouthful. But who is Lakeview? So if you don't know who we are, I just wanted to take a brief moment because we have been around quite a while. You may be more familiar with us as a Bayview name. That confuses people, but our parent company is Bayview Asset Management. They're actually based in Coral Gables, Florida, and they have the divisions Bayview and Lakeview. So that's why sometimes you hear them interchangeably. Lakeview is basically the arm of the company that deals with agency investor products. So that's why this would be a Lakeview program, but we're all part of the same company. We've been around and in the mortgage business since 1995. We're the second largest HFA servicer, master servicer out there, and we are the second largest Ginnie Mae servicer. So we have a lot of experience in both servicing loans as well as working with HFA partners. We currently have 13 different HFA partnerships, and as of last year, we have helped over 140,000 borrowers obtain new housing. So this is actually our first foray into refinancing for HFA. So it's very, very exciting for us as well, because it really is the key to improving your financial position. Obviously, right now in the market, as Aaron said, it's a little bit crazy. So you're probably not going to improve anyone's financial position today. But we think this is a very important tool for you to kind of have and keep hold in your toolbox, so that when the market does change, you will be able to help your borrowers take advantage and, improve their life, because who doesn't want to save money, right? So this program is going to be for rate and terms only. So no cash backs in this program. It's strictly a rate and term. Again, we're trying to help the borrowers, either lower their payments, lower their rates, but the key is gain a better financial position. So the home still does need to be owner occupied. So that's very important. And again, as Aaron said, this is for the 7-year forgivable second mortgage loans only. The Grants for Grads program and those without DPA would be ineligible. So you can do a government and a conventional option, either or, and you do not need to stick with the same. Again, unless of course you want to do the streamline or the easy programs, which we'll talk about in a minute. All of these loans, no matter what, and this is a program guideline, must have a net tangible benefit. So that basically, if you're not familiar with the term, that means the borrowers have to have a benefit. And the benefit that we are requiring is either a 50 basis point reduction in rate or $50 or greater reduction in the principal and interest payment. And again, I do realize as we sit here, today, October 13th, it's kind of crazy out there, and it's going to be hard to get a lower rate. But, depending on their situation, you may be able to take advantage of a lower loan amount, or possibly, which will possibly be a lower payment if they so desire. But again, keep in mind, this program is not just for today's market. We're not rolling this out thinking, okay, we're going to set the world on fire right here and right now with today's rates. This is something that you need to learn about, so when the situation changes out there, you have the information, the knowledge, and the tools immediately at your disposal, and you can and you can help your borrowers as soon as possible. So again, as always, sometimes investors have their own net tangible benefits. So again, our overlays are not, exclusive of the agency and investors benefits. You must always follow the most conservative option that does apply. So we do have all of the details on our product matrices. If you're not familiar with the way Lakeview operates our product matrices, we basically go through the products. We pick out what we feel are the most important points, your LTV, DTI, FICO, the basics. We also add in any information that we think we're going to get a question on. And then lastly, if we have an overlay, we will add that to our product matrix as well. But that's it. We are not rewriting the handbooks that are out there. So there's a lot of areas that we're actually silent on. And what is one to do when you have a question and it's not addressed in the product matrix? You would then go to the selling guide or the investor's handbook as applicable. So again, follow the guidelines if we are silent that you'll find in those handbooks. Why should you do this? Well, potential cash flow improvement, of course, lower interest rate and monthly payment. That one's a no-brainer, right? It also allows people to possibly pay off their home early, again, because they can resubordinate that OHFA second lien. So there are some benefits, and again, once that market gets a little more attractive, this will be even easier for you. But what will the process be? It's really not a big change. Again, keep in mind, as with most, loan programs out there, there's really only a few ways to do things, right? And why, mess with success? So of course, you're going to start, as you always do, by taking an application and locking your loan. You are going to continue to lock that loan in OHFA's system, and then you're going to submit that loan through the portal for approval and subordination. And that's important, right? Because you want to get OHFA in the know so that they can start that subordination process. And then, of course, you're going to follow your normal life of the loan steps, right? You're going to get documents. Your processors are going to order and talk to vendors, turn the loan to underwriting. They'll do the final approval, send it over to closing, post-closing, etc. You're going to close the loan. You're just going to make sure that all of your teammates follow the guidelines as per the process step they're at. So they need to know agency guidelines, OHFA guidelines, Lakeview guidelines, and possibly mortgage insurance guidelines, depending on what product you take. From there, once the loan is closed, you're going to deliver that first mortgage to Lakeview for purchase. We have a list of required documents that we need to review. All of those items are found on checklists. We post the checklists in our correspondent portal in our reference guides. So we will show you in a few moments what that looks like, but the moral of the story here is always use the checklist, especially when you're starting with a new program. Now, many of you who are signed up with us might be thinking, are there any differences to the checklist? Like, we already have the checklist. As whenever we start a new program at Lakeview or Bayview, we always review our internal checklist. There are times we need additional items. So you will note that the checklists are updated. So for example, prior to next Monday, if you go out there today, Ohio probably won't be showing on any of our checklists. So if there's specific documents for this program, they won't be there. So the answer to that unasked question is yes, you do need to get new checklists. Anytime a new program is launched, it's always a good idea to visit that site and take a look at the delivery checklist. Maybe nothing has changed, but maybe something has changed and you don't want to get caught unaware. So again, check the checklist, deliver that to us, and also, of course, you're going to deliver a post-closing package to OHFA as well. So make sure your ducks are in the row, as they say, with all of your packages. So as far as conventional options, you are still going to utilize those HFA products that the agencies offer. So both the HFA Preferred and the HFA Advantage does allow for a refinance, a rate and term refinance. Again, you cannot use any standard programs that includes Home Ready or Home Possible because it makes sense, right? OHFA is an HFA. It's right there in the name, right? So use the HFA products. Of course, if your borrowers are less than 80% AMI, that also allows them to take advantage of lower mortgage insurance, because just because you're refinancing, that does not necessarily mean that you've improved your loan to value enough to be, below that 80%. So you may still need MI out there. So again, make sure you're checking with their current income. Take a look. Maybe things have changed. You don't know. Obviously, the AMI income limits continue to change per county and per zip code. So again, double check, because if they can take advantage of the lower MI, all the better for them. As far as your loan to value and combined loan to value, there's no overlays here. You're going to just follow your agency maximums. DU and LPA, of course, will enforce that. The FICO score has to be at least 640. Manufactured homes do need to have a FICO score no less than 660. So that's one overlay when you're dealing with a manufactured house. As far as underwriting goes, manual underwriting and non-traditional credit would not be acceptable. So you need to get that approve eligible or that accept eligible when you're doing a refi with conventional options. Reserves, again, are going to be determined by AUS, as the DTI will be. However, DTI cannot exceed 50%. So 50 is the highest. But again, we don't really call that out on here because, as you know, neither Fannie nor Freddie, when you're getting into the high LTV, is going to get you an approval of over 50%. But again, just keep in mind 50 is the maximum. If for whatever reason your borrower, for example, may have 3 years worth of reserves and have an 800 FICO score, then it's possible they might get a 51% approval. So really 50 is the maximum. As far as employment and income go, follow your findings. There's one Lakeview overlay that is in place, and that is anytime you use 1040s to verify your income, or if the borrowers, work for family members, or if you can't get any income documentation and you're forced to do a written verification of employment. In any of these circumstances, you need to also obtain tax transcripts. That's the only time we require tax transcripts. Sorry, I'm having difficulty speaking today. As far as the number of years that you would order those, would be the same amount of years that your AUS requires you to verify income for. So for example, DU is run, Betsy Smith is self-employed. So your findings say, please verify Betsy's self-employment income with the current year and the prior year's 1040s. So therefore, you would have to order 2 years of tax transcripts, current year and prior year. If it just said verify Betty's income with the current year's 1040, then you would simply order just the current year's transcripts. So again, match it up. And here's where we're going to show you that lower MI I was talking about, because as you know, standard MI maxes at 35% coverage. So again, 35 to 18, that's a big difference in your monthly payment. So take advantage of that, of course, if your borrower can. Please do keep in mind, though, you'll see in green on my screen this important caveat. Some of the mortgage insurers have some additional overlays that may be a little bit stricter than our guidelines or OHFA's guidelines. When in doubt, always follow the most strict guidelines of anyone that is involved in the transaction. Then you will be safe. Because again, better to be safe than sorry, as I'm sure many of our mothers have preached to us constantly. Now let's talk about FHA. So for the FHA program, we offer the standard rate and term. That's an obvious one. Why would you use this? Pretty much only if you can't meet the guidelines of a streamline, because obviously the streamline's much easier. If you need to offer that, you're going to run it through your engine. So you're going to either use DU or LPA. Keep in mind, Freddie's engine, LPA, does not give you an eligible finding. That's okay to get an accept ineligible, because LPA was set up to only give you an eligible if it's eligible for delivery to Freddie. So it makes sense, right? Because, these are government loans. They're going to Ginnie and not Freddie, so therefore you would get an ineligible. Fannie, on the other hand, does not do that. So Fannie will give you an approve eligible. So that's okay, though, if you're going LPA and you get that accept ineligible, you can still go forward. We do also allow manual underwriting only if the insurability isn't affected. So again, you still have to meet all those guidelines in the handbook. And you would use this basically when you're doing a downgrade due to additional information that isn't covered in the AUS decision. That's a 43% maximum DTI requirement as well on those. And in this instance, there's also another guardrail, a 660 minimum FICO. Now let's talk about streamline, because most of you doing a refinance, you would fall into the streamline guidelines. And those, of course, are manual underwrites. So you're going to follow basically the streamline guidelines, with the exception that we will need you to follow a 0 times 30 times 6 payment history. That's required on the mortgage that you're refinancing. You may be familiar with this guideline because it's actually a Ginnie Mae guideline, but we do need to, of course, follow it because these will be delivered to Ginnie Mae. Payment history does need to be verified, and you can do one of the following. So you can either verify it with a credit report that clearly shows your month-to-month payment history, or you can order a credit supplement, as long as, again, it identifies all the payments. If you can't get that, you can go right to the servicer and actually get an old-fashioned, ledger with a payment history. Shouldn't have to do that in this day and age of digital, but it is acceptable if you need to. All of these loans must be safe harbor, and the new loan cannot refinance an existing loan that's currently 30. I want to point this out to you, and this is the same on all the loans. Please remind your borrowers to keep making payments because, again, you can't refi something that's currently 30. So many people that are going through the refinance process just think, oh, I'm in the midst of the process. I don't have to make the payments because that'll just be counted, in my balance or in my payoff. Well, yeah, they'll account for that, but you'll also be late. And if you're late, that means you no longer qualify. So again, keep up the payments. Now let's talk about VA. So again, we offer the standard option if you can't do an IRRRL, but once again, most people are going to go through the guidelines of an IRRRL. If you don't, these guidelines are basically the same for all the different agencies, a 640 minimum FICO. The maximum DTI would be the lesser of 50% or DU or LPA approval. You're going to get that approve eligible or accept depending on your engine. And again, the same overlay that we have on all the Lakeview products. As far as an IRRRL goes, of course, those are manual underwrites. And again, you're going to see these same requirements, the 0 times 30 times 6, because once again, they're delivered to Ginny. So I'm not going to continue to repeat these because they're also the same when we get to the USDA slide, but it's important just to understand these. Of course, all of this is also spelled out on the product matrices for you. So let's talk about USDA. Again, you're going to go a standard if you can't meet the guidelines of a streamline assist. The minimum FICO is 640, lesser of 50% or GUS approval. So remember, especially now, GUS is required. So you need to run these through GUS. For borrowers in consumer credit counseling, this is a unique item for USDA. So if you're in consumer credit, Chapter 12 or Chapter 13, your applicant actually has to get written permission to do a refinance. So they have to get that from the credit agency or the bankruptcy court, depending on how they're going here, to enter into the mortgage transaction. So if they don't have the permission and that permission is not delivered in the loan file, it would be ineligible for purchase. So USDA also requires a 0 times 30 times 12 payment history. So they're a little bit more stringent there, again, on the standard. So as far as the assist, that's a manual, but still keeping in mind the 0 times 30 times 12. And again, you're still verifying that payment history with the same 3 options: credit bureau, credit supplement, or the actual ledger. Again, we want to make sure the loan we're refinancing is current. Now let's talk about the portal. This is where you're going to deliver the loans. You may or may not have access to our portal because it does require login credentials. These credentials are maintained and administered by your own company. So your own company sets the guardrails on these as to who gets credentials and who does not. Do not worry if you don't have credentials, though. All that means is you don't really need them because your employer has already pulled down the important information for you, and you're not one that is going to deliver loans, so you don't need access. But you may be curious, what does it look like behind the portal? So we're going to give you a glimpse behind the curtain as we speak. So this is what it looks like when you open up the portal. This is the landing page. So you can see over on the left side, I don't have an arrow here, but where it's kind of highlighted 6033, the closed loan, that's actually where your post closers are going to click to deliver the loans, any of the documents, or if they want to see any reports. But this is also the landing page where you're going to see all of the announcements that we've posted for the current year and also the prior years. You'll also see a little time frame very much at the top, gives us the term times, how we're running, day to day as far as reviewing packages. So, if we're at 3 days conventional, if we're at 7 days jumbo, non-agency, where we are in the process of reviewing documents. But again, so this is where you're going to see the announcements. You'd click on the left tabs for your various documents. So the product matrices for this program would be under our Lakeview Affordable Lending. The seller guides, and in this case would be the Lakeview Seller Guide, can be obtained here. And then we have that reference library. That's very important. That's where you're going to find the checklist, as well as what we call our quick reference guide. The quick reference guide has everything from fees to addresses to MERS numbers. There's all sorts of good information on that guide. And again, that's updated every time we add a new partnership, so you have all of the information. It's also where you're going to see some sample documents. Don't really need any sample documents for this program, but if you have access and you just want to fish around and take a look, feel free. Lastly, the other most important tab here is our training resource tab. So your team can download presentations, job aids, all sorts of stuff here, and it's a great little library of documents. So again, your company controls access to that site, and it's okay if you don't actually have access. You'll know if you go to our page and see where this arrow is and you click on Delegated Closed Loan Portal, it asks you for credentials. So if you don't have credentials, that's as far as you will get. Now, I do want to point out, however, on this page, we are in the process of updating this to allow people without credentials to obtain information. So right now, our non-delegated clientele can see their product matrices and training information, but we're actually in the process of updating this website so everyone's information will be posted. So even if you don't have credentials, you'll eventually be able to see the product matrices, the announcements, the training resource, all the information. But again, that's a work in process. We expect that to be completed hopefully by the end of the year, but definitely by first quarter. So again, for more information on the programs themselves, because again, if we're silent in the product matrix, look at those handbooks, right? All of them, the seller guides. So you'll notice on here I have VAs, FHAs, and USDAs, but I don't have Fannie and Freddie because most of you probably already have those bookmarked. But if you don't, you can just use our friend Google and say Fannie Mae Selling Guide or Freddie Mac Selling Guide, and it'll take you right there as well. So what happens if you have a question? What do you do? Well, again, we're not reinventing the wheel here. Go to who you go to today if you have a question. Most of you, it's probably your manager, right? If they don't know the answer, they're going to escalate it appropriately. Eventually, it may make its way over to our sales team, and they'll get the information back to you. If you're a post-closer, you're probably working with a client manager at Lakeview, because every single lender has an assigned client manager that helps with all suspense items, any disclosures, forms, or conditions. So their job is to clear the loans and get those purchased as soon as possible. As far as pricing goes, again, our programs are out there in the pricing engines, but you're of course going to refer to your own desk as to how you can obtain your own pricing. Program guidelines or scenario questions specific to this program, you can either ask Ohio or you can run a scenario by an underwriter by sending an email or picking up the phone and contacting our underwriting questions department. We have a team of underwriters that is what their job is they will help you with any scenario. They have access to all of the guidelines. So that's what they do. So please take advantage. If you're a post-closer and you're having issue delivering the loans, we have a client service team that works on our portal. So they will do everything from teaching you, taking you through one step by step to, if you're just stuck, you're having an issue, you pick up the phone and call, and they will help solve the problem for you. Again, please ask a question. I know probably by the time you go to use this program, this information won't be as fresh for you, but these people will all still be here. So even if you don't remember the information, you know, I would encourage you, make sure you reach out and ask the question. So speaking of questions, Erin, I think we could probably open it up for questions. I'm going to guess you could, do you want to open up the phone or do you want to just do a chat scenario?
It's kind of hard on GoToWebinar to open up because you have to do them individually. So it'd really be easier to just do questions. And I do have one question so far is how do we find out who our client manager is?
So your client manager is assigned by lender. So if you're not sure, you can send an email to that client service. I'm going to go back to the screen, client services at bayviewloans.com. And just as long as you identify your company, they will respond back with your client manager's contact information.
Okay. We're wanting to, so your contacts at OHFA will still be the same. So you're still going to go through OHFA you're still going to go through OHFA we're going to do a pre-closing review, very simple, where there's no income limits on this loan. So we're not going to be looking at income or anything like that. We're just going to do a very simple review to make sure that they're eligible. I think we're going to require a subordination agreement request, just things like that, so we can get that process started. So yeah, you will still have your normal contacts at OHFA. I'm guessing we will receive a copy of this PowerPoint. We can send out the PowerPoint, and we are also going to put this, once we get this webinar recorded, it will be on our website, on OHFA's website, under training, on the lender, our partners, lenders in the training, we'll put it down there. We'll have it there. We will also have Lakeview's guidelines and OHFA's guidelines for the refi on our site, just like we have our own. Does anybody else have any questions? I'm not seeing any more come through right now. Okay, wait a minute. Okay, got a couple. Hold on. Does the forgiveness of the grant reset or remain on the current timeline? The grant is going to, it will remain on the current timeline. It's not going to reset. It will still be, whenever it was originally going to be released and forgiven is when it will be released and forgiven. Where can I find transfer information, service transfer information for Lakeview?
So all of that information is going to be on our quick reference guide. So that would be posted on our site. So you can either ask your client manager, and again, if you're not sure who that is, reach out to our client services team or just ask them for the quick reference guide, however you want to handle it.
Okay, and I have a question. Does it pay just like an OHFA loan? So the SRP we currently have on our non-refi, on our purchase loans, is 2.5%. On the refi, it's going to be 1.5%. We're still going to allow a charge and an origination fee if you want to, up to 1%, and that would be yours to keep. But the SRP is going to be 1.5% versus 2.5%. Okay, next question is, you may have already said this, but when can we start utilizing this refi program, and are all past OHFA borrowers eligible? You can start utilizing it on Monday. It will be, we're going to roll it out on Monday, so you will see options for you to choose it as a refinance, the refinance program. We're working with our vendor to try to get them pushed out separately, so they are, they're easily distinguished when you go to make that reservation, but that is not available yet. So you will see it in just your regular standard products. When you go to, reserve a loan, you'll see it listed as a refinance. But yes, you can start using it on Monday, and it will be eligible for anybody, again, who has the 7-year DPA. If they have a grants for grads loan or they have no down payment assistance, they're not going to be eligible for this program. Where will rates be posted? Rates will be posted on our website, just like they are now, and they'll be on our rate sheet. Our FHA streamlined closing costs paid out of the 1.5%. I'm going to go with no on that. I'm not sure I totally understand that, but I would assume you're going to charge your closing costs to the borrower. Is that answers your question? Yes. Okay. Okay. I'm not seeing any others, but we'll wait here a second, see if anybody has anything. They're typing madly. Will post-closing housing counseling be required? It will, post-purchase. It will not, because it's not a purchase, so we will not be requiring any kind of housing counseling. But it is, we thought it was good for the housing counselors to know that it is an option for borrowers who are, it is an option to be able to refinance down the line for borrowers who are currently purchasing. It's going to be a very straightforward refinance, just pretty much like what you just any other loan you'd refinance. You're going to have to provide us, like I said, there's not going to be a whole lot on our end that we're going to need to do up front. I mean, behind the scenes, there are some things that we need to do in order to, get loans transferred over from our current master services to Lakeview and things like that. One thing to keep in mind is if your borrower, if you're refinancing somebody who has an MTC, they're still going to have to go through that process of requesting a reissue for the MTC. We're not going to get involved in that. We're not going to make that part of the process that we go through because that's just way too much. So the borrower is still going to have to apply to have their MTC reissued if they have MTC. And I have a comment. Good stuff. Excellent opportunity to reach out to our past OHFA clients to notify them of the change and ability to refi. Yes, hopefully you will. We had just FYI, we had before the rates went crazy, we had identified about a year and a half ago somewhere around 9,000 borrowers who had a 7-year DPA, who had somewhere between a 4% and 6% interest rate who had not refinanced yet, which is really what kind of drove us to do this. We don't know why they didn't refinance when rates were low. Some people just get comfortable where they are and don't think about it. But we saw how many, there were that weren't refinancing. So that was part of the reason that we wanted to give them the opportunity to better their financial position. Is there a flat fee for the subordination by OHFA? Yes, good question. Yes, there is a $100 fee for the subordination by OHFA. And that's something that Lakeview is going to take that out of the purchase advice when they purchase the loan, but something you can charge to your borrower. And we'll have on our the guidelines that we have, we'll have all those fees listed in there and what Lakeview fees are and things like that. Okay. All right. Well, thank you everyone for your time today. We will be posting this on our website. We will be posting the training on our website. This is we recorded this, so it'll be posted on our website. We also have another date on Tuesday, I think at 10. We're going to do this presentation again, so if somebody missed it, they're more than welcome to come back at 10 o'clock on Tuesday. And we will again get these posted. And if you have any questions, please feel free to reach out. I think you guys know where we are and how to get a hold of us. But please feel free to reach out. And thank you again for taking the time today to be on this webinar. Have a great day. Thank you.
Thanks, Erin.
Thanks, Deb.